Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, another interesting daily arbitrage trade as the earnings reports really shrivel up, leaving the cash machine standing idly by. That'll pick up tomorrow. I think we will have a trade, maybe two to make and another one the day after. So we'll pick some things up in the latter half of the week. But as far as the daily arbitrage trade, the big news today was retail sales. Now, if you've been paying attention at home, economic data points, bad news has been good news. What do I mean by that? Well, economic data that misses expectations or shows economic weakness has been celebrated with further stock gains. This is what a melt up looks like. And in anticipation of the Federal Reserve cutting interest rates, with no real recession anywhere on the horizon, investors are looking to the past and making all sorts of assumptions of what does the market look like a year after an interest rate cut, yada, yada, yada. So there's a lot of things to unpack there in terms of really attacking the market on a day-to-day basis. When you get when you get bad economic data, that is celebrated because it means rate cuts and maybe even a big rate cut. The question I want to ask Mr. Market is, what do you do with good economic data? That's what happened today. Today wasn't just good economic data, it was spectacularly good economic data in the form of retail sales, better than expected, ex automobiles, better than expected. This is a very strong economy. And we're going to get a rate cut into a strong economy. This despite CPI still being in the, I don't want to call it danger zone. We'll call it the worry zone. But PPI has been behaving, and there is a deflationary bomb coming really from across the globe that leaves the United States as the lone bright light on the planet in terms of economic growth. Imagine that. America has been doing it for decades now, and that's not going to change. I could digress into a long diatribe on the value of economic dominance in the United States and the value of a strong dollar, which makes me wonder why we have policies today that are weakening our dollar. But like I said, I'm not going to do that. Okay. So back to the theme at hand. What did the market do with good economic data in the form of retail sales? I was expecting sell the news, just like I'm expecting when the Federal Reserve cuts interest rates, a sell the news kind of a moment. We've been seeing the market go up and up and up and up. On days that it's down, it doesn't really go down that much. So look at today, for example, pre-market, we got those strong retail sales and stocks sold off really just a tad. We were looking at fractional gains in futures markets before the market opened. My own daily arbitrage factor score was +2, telling me that the market should have been up 50 basis points today. So I was going to triangulate a trade off of that strength, even though some of that strength dissipated into the open. If there was more weakness, then I was going to attack on the long side. Well, look at the SPY here at the open. We opened strong, and then bam, we declined. That's selling that I wanted to exploit with a long uh, debit call spread on the daily expiration SPY options. And I was looking at the 661, I believe. Let's see, I can just tell you exactly what we traded. Yeah, the 660 and the 661s. We bought the 660s, we sold the 661s, and looking for this selling to create an arbitrage opportunity vis-a-vis a 50 basis point expectation using the daily arbitrage factor score. Now, at some point, I will do a video explaining where are you coming up with this daily arbitrage. It's complicated. Suffice it to say, there are 7 specific data points that all go into the bowl, mix it all up, and the gonculator spits out the daily arbitrage factor score. So, and I use that really reliably, again, triangulating my attacking of the market each and every individual day. Instead of looking at, well, geez, are we going to get a recession? Is the market going to sell off? Gee, are we going to get a rate cut and then the market goes up a year later? Or, oh, gee, what else can we worry about? Don't want to do that. I just want to look for opportunity where I can find it intraday. That I feel confident in. Everything else has gone beyond the scope of making any sort of sense. That doesn't mean it can't continue. We talked about irrational exuberance, that those words uttered by Alan Greenspan in 1996, 4 years of stock market gains after he uttered those words, irrational exuberance. So in a melt-up, especially fueled by a technology revolution like the dot-com bubble, and today we have artificial intelligence. So, hey, I am not going to sit here and say this can't continue. That's not my jam. Again, personally, I don't feel comfortable with it. I prefer buying on the dip. That's what 2 Sigma, by the way, is all about. And this kind of environment actually is very difficult for 2 Sigma. Not impossible. Can always manage whatever environment gets thrown at us. So in today daily arbitrage, look, we had a sell-off. I want to buy a call debit spread. Did that. And yeah, we sold off some more. So the trade really just, and then it went sideways. We were just sideways, sideways, sideways. Then about midday, a little early afternoon, we got some movement on the trade, and now what was showing a 25 to 50% loss was making its way back to the flat line. And with an hour of trading to go, we about an hour and a half of trading to go, had a nice rally, got us into the profit zone on the trade. I don't set a profit target on these daily arbitrage trades. I feel comfortable with surfing, and there's a feel to exiting these trades. And so when I struggled all day to make a profit, and now here, I think I was able to lock in a 10% profit on a trade that for most of the day was in the negative. Hey, I'm going to do that. That turned out to be wise. Sold off again. Did get another rally here at the close. So, you could have, found another nice wave here, but boy, it was not very long lasting. And you can see we ended up down 15 bips for the day, nowhere near up the 50 basis points that I was triangulating to using the daily arbitrage factor score. There's one reason for that. Going back to what we talked about in the beginning, this market is going to treat good news poorly, and bad news is going to be celebrated. That's just happens to be where we're at. Tomorrow now is a whole different story with the Federal Reserve. So it's going to be interesting. I'm looking to scalp whatever I can in the morning using an arbitrage factor score that I calculate 30 to 60 minutes before the market opens, and I'll do that tomorrow. That's all I have for today, folks. Sorry about the long video. I hope this is educational. I hope it's informative, especially for those of you that, if you're like me, scratching your head and going, how do I ride this magic carpet ride that we seem to be on? My answer is you don't have to. You can attack the market intraday using things like the daily arbitrage factor score that I'm talking about here. This is JD for the Rational Trader. Take care, everybody. Good luck with all of your trading. We'll see you tomorrow, and take care.